let's get started. For people who follow me for quite some time, you know that I usually do a whole production series on a company that I find really fascinating, and I would usually cover it like cover it under 10 to 12 episodes, and you guys will see the content for a month. But this time is very special because I actually find a company which is actually no locking period and no waiting for the Series A or later on. Like they're IPOing under 90 days. Okay, so we're gonna do it differently this time. Um, we're gonna have a compact session with the founder this time, and my content will be sent out in a much more compressed timeline. So let's get started. Before we go into details, as always, um, please, I'm not advising, I'm not, let me just read this. The information provided here is for educational purpose only. All information provided here is provided in good faith. However, we make no representation or warranty of any kind expressed or implied regarding accuracy, adequacy, validity, reliability, availability, or completeness of any information provided. Under no circumstance shall we have any liability to you for any loss or damage of any kind incurred as a result of the use of the information shared here or reliance on any information provided here. Your use of the information and your reliance on any information provided here is solely at your own risk. Please talk to your own professional team. Okay, I'm just sharing my own journey in my own investing, I guess journey, and I'm only responsible for my own money. So you got to do your DD. Okay. All right. So very happy to have Vince here. So actually, I know you have a lot to talk about, including yourself and the big idea and we've accomplished so far, on your track record and what's coming up. So tell us, what's the big idea?
The big idea is the tokenization of real world assets. So that's the big idea, the theme, the sector, the interesting, area and the intersection that we are with technology, as it crosses the path of the capital markets industry and as it transforms this industry. Think about, Uber and how the effect it had on the taxi industry and Airbnb on the hotel industry. Now actually think about, the industry that capital markets is in right now and how technology can reshape, refocus, reclassify, and redistribute how things operate more efficiently within the capital market structure, and how capital is deployed more efficiently, and how investors have greater transparency into what they're investing in.
Okay, so just to summarize, you guys are a crypto company?
We'll call ourselves a fintech company with a Web3 subsidiary that has, crypto on our balance sheet. So long story short, if you want to call us a crypto company, yes, we are a crypto company with a technology slant.
Okay, do you have your own chain?
We do have our own layer one chain, and that layer one
Okay.
chain is coming with us to the public markets. And I'll tell you why that's so important.
That is why I think like people need to know about this because like I don't think there is a layer one chain that's actually going public anytime soon, except for you guys. I think you guys are first, right?
We are first, and the first is always the most painful. And I will say that there's been a delay on us going public as a result of a lot of activity and approvals that we've received from the regulators and the exchange in order to do so. And we have a green light to go.
That's incredible because like honestly, I didn't hear that on the news often. Like and I did not hear you guys are going to public on the news at all. So I'm really surprised that I can actually catch you guys 90 days before you go public. And 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 to be clear, like I think the participation window is very short. It's only 15 days, right? From now. So I
That's
think
right. The close of our funding officially closes October 16th, which means funds should be in the accounts for review October 14th. Subscription documents should at least be received by legal and our CFO, or basically our finance team, October 10th timeframe.
okay. So just recap, you guys have a layer one public chain, and you're going IPO in under 90 days. Okay, that's really interesting. Um, so what problem are you solving?
Well, the problem that we're solving is I think there's many problems that we're solving. There's the inefficient nature on just how capital market structures operate today. There's a lack of transparency on who owns what, and who's selling what, and maybe who's leveraged or over leveraged and shorting a particular stock. That's what security tokenization and having things run on a public blockchain provides greater clarity as someone's outrunning a stock, or overrunning it, or shorting it for that matter. But the what it really does, and who is potentially doing that as well. But what it also does is it increases like an opportunity to, let's call it, liquefy what is not liquid today, right? Transforming a one particular asset into a different asset class. And a simple example of that is like real estate. There's real estate at everybody understands, investing in real estate. You buy the real estate, you put it into your name, your company's name or portfolio. Maybe you're building a portfolio of real estate assets, to generate, an income stream and, wealth as it appreciates as well. Well, you could tokenize that now, and that converts that real estate asset into a security token, right? And that individual asset itself, and it allows other people to participate actually in that asset class, right? And it's not a real estate broker that's selling real estate is not the same person that's selling the security token. That's a securities actually broker. And so, they share very, very similar definitions and nomenclature, but one cannot sell the other, right? Without, a legal framework. But it just highlights the case of an asset class crossing over into a different asset class. And that happens with other things as well. You could tokenize carbon credits. You could tokenize a sports and entertainment team. You could tokenize a film, and right, like in the funding of film. You could tokenize the whiskey barrels in the aging process, actually what that provides. Because what does every single one of those things have in common? It's about capital formation and creating actually an opportunity for that person that's operating the business to invest back into their business, but take money off the table without having to go to a bank, for an expensive operating line of credit.
What we're saying is that your platform allows people, or your chain allows people to unlock liquidity in their assets, right? And fractionize it.
Correct.
So,
Right. Think about Pokemon cards, right? Like again, people trade Pokemon cards. They grow up in value. Now you can fractionalize that and tokenize that, and it can be trading actually, a different sense. Gold as another case, right? Like, people buy gold now. There's a whole group of people that buy gold at Costco and lock it in a safe. Well, now you can tokenize and buy a tokenized version of gold and trade it in an exchange. Now you've got liquidity. You could borrow against it as well if it's locked actually inside a digital custodian or inside a particular chain, and there's a lending protocol that's part of that.
to be honest, like the how I found you guys, I find it fascinating is because like you guys are literally at the corner of my doorstep, and I was actually looking for suppliers to bunch of the asset class you mentioned. I own some, so I'm like, okay, there must be a better way to do this. So I was looking for liquidity, and I was looking for suppliers so I can provide that. But the nightmare came when I was talking to a bunch of lawyers, and none of them can give me a very clear answer as to how you can do it legally. They all
Mhm.
said, we don't know, we have to try, and we gotta talk to the regulators. Like, is that still um in the gray area today? That's number one. Number two is, during my search, I have came across quite a few, I guess, technology companies which do exactly what you just said. They also fractionize and they also tokenize. So what sets you apart?
Well, let's talk about the gray area first, and I'll talk about the section, what sets us apart. So, gray area, it's still in the gray area? No, right? If you lawyers giving you I need to research this, come talk to us. We'll hand you off to a lawyer that can give you the green light answer, and then walk you down the path on exactly what structure you need to do, what documents need to exist, right, in order to set up the vehicle in order to tokenize that particular asset. So this is no longer a research project. This is real infrastructure that's been built, and has been operationalized for the last 4 years. Our layer one chain has been operating, and has been tokenizing assets from all around the world. Um, and the and again, we've got broker dealers that are utilizing that. We have a particular client and partner in Canada that is tokenizing real estate called Oaktree. And Oaktree is a group of Avison and Young commercial real estate brokers. And they've set up a different structure and a different organization called Oaktree. And that's the ability to tokenize commercial real estate and allow accredited investors to participate in what would be considered before actually limited partnership funds that were created before, in order to either build a commercial building or to participate actually in the ownership aspect of it. In the U.S., we also have a very similar customer as well called RE Tokens. They're a FINRA registered broker dealer, issuing security tokens backed by real estate. They've also set up an ATS, an alternative trading system, approved by the SEC for trading in security tokens as well. Both are regulatory approved. Both are operating with regulatory actually oversight as well. And both are no longer science experiments. They are operating businesses, operating on our chain and working with Polymath in general. So what sets us apart? So what sets us apart is our layer one chain and then the white labeled solution that we provide to the industry. So let's focus on the layer one chain first. Layer one chain, we started the development back in 2018. We launched it in 2021. Mainnet was launched October, I think 20 October-ish timeframe, 2021. And that has been live and operational, since then. All node validators on our chain are financial services entities. You have to be a bank, an exchange, a money services business license, a broker dealer, right? You have to report to a financial services regulator to operate on the chain. Why? Because that's important to us, and trust is also important for the industry. Nobody wants to put money into a security token offering, not knowing who A, the validators are, or B, actually who else is operating on that chain, right? So, and how do we actually overcome that? Who else is operating on that chain? All investors that come and issuers that come onto our chain have to go through a KYB and KYC process. So now everybody is known to the entity because the regulator actually knocks on the door of the issuer and says, okay, show me that you have followed, the law, right? Have you gone through KYC? Do you know your customer? Do you know the source of funds, right? Everything is actually provided, to our issuance customers via white label platform that has all of that actually built in and ready to go. So license a solution from us, put your logo on it, and then off you go. You can start your token issuance. Where it also sets us apart, even from the layer one chain aspect, is that everything that has to be done in smart contracts, we've buried into the chain itself. So it's part of the fabric of the chain. It's what's called in our blockchain world, a pallet, a governance layer that's built into the chain. And some chains actually, again, it's required for smart contracts in order to execute the legal structure of that security token offering. So you need smart contract developers. Then you need a smart contract auditor to make sure that the developer didn't actually introduce a backdoor. Then you've got to manage that smart contract as well. With our chain, and again, trust is very important. That's all built into the chain. You don't need a smart contract auditor or developer as well. It's all built into the chain as part of the overall fabric, and this is why the industry loves us. That overhead and that complexity is removed as a result of us building what is purpose built and fit for purpose for the tokenized for the securities industry, right? And that's why, again, regulators love the system actually because it's simple. Again, it's a vehicle actually that does the job that it's built to do.
Okay, so I have so many questions just based on what you said. I guess the first one is like, as a potential user, from what I'm hearing, does that mean that I have to have a broker dealer license when I like if I want to get on board, or is that like, do I still have to bear that cost?
Um, okay, so if you own an asset, like for example, if you had a startup, and you wanted to do raise money for your startup, a friends and family, a seed, a Series A, Series B, you don't need a broker dealer license for that. Why? Because you own the asset and you're raising funding for the asset. It should be reviewed by a lawyer for sure, and the lawyer should still underwrite it, right? And that's typically what happens in a technology startup. If you're
Right.
tokenizing, let's say, Cindy, you've got, a condo development or, or building or commercial building that you own. Can you tokenize that actually out of your corporation? You absolutely can. Do you need a broker dealer license to do that? No, but you still need a lawyer to do that, right? Like, or at least to ensure that you're following the right structure and path. And this is again where we can help you to point you in the right direction of the law firm and legal team that can help guide you. You don't need to be registered as a broker dealer or in Canada an exempt market dealer. Um, Should you do this multiple times, however, like under a corporation, you want to tokenize multiple assets that you own, the regulator may ask you to register as an exempt market dealer, even though they are the assets yourself. So, the first time, probably not. Second time, maybe not. Third time, then they may ask you to register as an exempt market dealer.
Okay. And also, like, so for example, if I have a fund, you know, I can, from what I'm hearing, I can do this on the chain directly. Don't have
Yep.
to bear lots of overhead.
Yep.
Now, can I, like, does it actually have a marketplace for the fund to have like a secondary? Like, I know primary, like primary level, you guys probably have that as a dashboard, but like, do you provide secondary liquidity?
We do have a bulletin board service where that, and again, it's white labeled to our customer that they do that does provide the ability for investors in that particular fund to exchange.
Mm,
Absolutely.
okay.
There is a permission chain that is coming on stream that will allow you to do that as well. And again, it's up to regulatory approval. Can investors within that particular fund can they exchange outside of their particular closed loop community? That now it's subject to the type of security that you were issued, the legal structure that was provided, the permissions that were provided. Again, is it tradable or is it not? Because typically, in some security token offerings or even just equity offerings as well, like an investment is subject to a lockup. It's subject to like who can own it, whether it can be traded as well. There's differences in between, again, preferred shares versus common shares. Same thing with security tokens as well. But this is where the machinery takes over. If it can't be traded, it won't be allowed to be traded as well. You'll try to put it on a decentralized exchange or even on a centralized exchange, and well, the legal structure that's built in the security token will take over from there.
Right. Okay. So, and like this layer one chain, so I'm assuming it's built on um Ethereum or
It's a substrate parity based chain. It is EVM compatible, but it's not based on Ethereum. Ethereum, as you know, like I don't, like how many validators are there, and are they known entities? Are they registered as well? No, they're not, right? And
that,
so this is a very
that's
specific chain that's been built specifically for this. It's not a side chain. It's not a layer two either.
that's what I find it interesting because the whole idea of blockchain, regardless whether it's like RC, like right, like Ethereum or any other, like it's really number one to remain anonymous. Number two is um you actually take financial institution and essential nodes out of the picture. It's really, like most people say, give access back to the people, right? But you actually put the financial institution as validators on your chain. I find it that's really interesting, like really interesting. Uh, how's the perception out there?
The perception is very good, and I think they're like just so you know, like the reason why we put the financial institution back into the equation is because it's all around a trust. Like if you were to lose your money, who are you going to go to, right? Like whose door are you going to knock on? You're going to knock on the issuer, right? If that issuer is gone, then who takes responsibility? Well, the underwriter, and who underwrote it? The lawyer. The chain doesn't take accountability, but we don't want actually the chain to be the source of the reason why people didn't trust it. Like there was a bad actor on the chain that issued something, or funds were transmitted actually across the chain as well. So that's why the financial institutions participate in this. Where you can't get around, you can't skirt, is you can't skirt the law, right? And so, and that, again, that's why that this is a fit for purpose chain. A regulator is always going to have oversight. Even when you look at what's happening in Dubai, and you can say, wow, they can tokenize real estate in 24 hours, and they've had a couple of issuances where they sold out in less than 24 hours as well. They're running their land department on the Dubai Land Registry is running on blockchain, which means actually you can tokenize real estate that much quicker, which then means that you can put it into a marketplace that much quicker. But what it doesn't circumvent is any legal structure whatsoever. There's a clear legal framework that's been defined in that particular jurisdiction, like there is in the US now and in Canada that we still have to follow. Because at the end of the day, if you lost your money, you're going to scream at somebody, right? And You can't say, well, I didn't know that that wasn't a network of trust that I couldn't trust it. We want the industry. This industry will flourish only when there's confidence in what is the underlying fabric and who's operating actually within it.
Yeah. That actually is a great segue into my next, section, which is all about numbers and how you're doing so far. So let's talk about non-financial numbers first, like from operational perspective, your chain, like how many users, what's the volume, like what's like I'm assuming you guys have your own token, like
Yep.
how like give me the lay of land.
Yeah, so for our token trades about, 2.5 million a day. Market cap is, 200 million, a little bit north of 200 million as well.
So
As
you guys would have a pretty good ranking, I would think.
Yeah, I think so. I think we're in the top 100. The assets on chain so far. So, we've tokenized well over $3.5 billion worth of assets on chain. And I mean in a previous version when we started out, and just so you know, we didn't build the layer one chain first. We built an application first on Ethereum. We tokenized $3.5 billion worth of assets on chain. Then we built our layer one because we realized how difficult it was to operate on Ethereum. And so again, that's why we ended up pivoting, building the layer one chain, then building the applications on top of it in order to make it all that much easier. So let's talk about the numbers on our current chain. Almost $1 billion worth of assets now on our existing chain today. Pipeline of over $4 billion worth of assets to bring on chain. A lot of that is real estate, commodities, equities, interesting things like sports and entertainment type of teams, distilleries as well, needing operating capital. Number of users, investors that are on chain today. I think we're about 15,000 right now that have DIDs on the chain. There's activity, every day, right? There was a new issuance 17 hours ago that I saw of an asset that's been, tokenized on chain. Not sure exactly what it was, but again, that's the activity level. The stream is coming actually, and the activity is happening. Um, yeah, and the token price, I think the token price actually reflects actually where we are today, but I don't think actually, I think it's well undervalued today where there's opportunity in the operating business and our IPO actually as it stands. From a numbers point of view and the company point of view, so the company that's going public is sitting on $85 million worth of liquid assets on our balance sheet, and that's a combination of crypto and cash. And that again, we're holding 26% of the public float of our crypto as well, and that's secured against the chain. And that's again, that's the confidence level, that we want to bring to the industry. That we're bringing the layer one. We're also locking in, our PolyX as well, or sorry, our token as well, actually, in order to ensure that the confidence is there from an industry point of view.
Oh, we'll discuss more of that a bit later. So let's go back to the chain. So like how many users or how many active users like do you know that user chain?
Active users on the chain, I'd say about 15,000 active users on the chain. We have more than 30 white label issuance platforms spun up on the chain as well. Some of them we announced already as broker-dealer customers. Some of them are individual issuers as well. So I'd say fairly active. And there is a large deal that we're going to announce after we're public as well, where we're tokenizing gold, and gold that's already named in a mint, but we'll provide it with the all the platform that like all the technology that's required to be able to be exchanged in a permissioned exchange.
Okay. Now that's a perfect segue into my next section, which now let's talk about everything about financials.
Hmm.
So you had billions tokenized, you're tokenizing a few more billion. Like is that your main revenue driver? Like are you guys profitable?
Yeah.
Tell me.
Yeah, so I think I mentioned we're sitting on $85 million worth of NAV on our balance sheet. We've got no debt in our structure whatsoever. We're generating it this year. We're on track to generating about 20 to 22 million in revenue this year. We've been profitable. We have audited financial statements for the last 3 years as well. always been profitable, always putting money to the bottom line. Last year, I think our revenues were about 18 million, and we put about 30% down to the bottom line as well. This year, again, because of the go public activity and there's a lot of legal fees actually, again, but this is an inordinate. We still will be profitable towards the end of this year for sure. Um, the primary sources of revenue come from, three categories: SaaS licensing fees, our professional services fees, and then staking as well. So majority of our revenue that is coming from staking, but if you ask the question and where will it be in 3 to 5 years, there's going to be a conversion from our primary source of revenue will be coming from software licensing fees, transaction fees on the network and on a trading platform that we own, and then staking will be more of a minor revenue stream.
Interesting. Okay, so let's talk about the transaction fees first. Since you're gonna tokenize so many like billions of assets, like would you charge like a one-time fee, sign-up fee, like transactional? Well, you said transaction fee. Is it recurring? Is it percentage? Like what?
Yeah, Yeah, so it's a white label platform. There's a setup fee. There's a annual recurring fee on the platform itself. So think about Shopify if you're selling shoes online. Same thing. Setup fee, annual monthly fee that turns into recurring, and then there's transaction fees as a result. We're the same way, right? Not any different. Setup
How much?
fee, listing fee, tokenization fee, transaction fees on the issuance side. And then from the chain itself, network transaction fees from the trading platform when it's trading, there's a trading fee actually and a fixed fee as a result of that. We don't charge basis points on anything. Like if I was to do that, then I would need to be a broker dealer myself.
So then the transaction fee, do you charge a flat fee or is it percentage?
It's a flat fee.
Okay, okay, so that's very different because most of the proposals that I personally got is like a percentage fee. So okay,
Yeah,
so then that would encourage, I guess, volumes on your chain, right? That's
that's right.
and you're not a broker dealer, so yeah. Okay.
No, I like that. I guess that one thing is actually if we're going to transform the industry, what's important is you got to think of a different business model. You just can't adopt the same business model that
Yes.
the existing exchanges are providing today.
Exactly. Exactly. That's why I didn't end up signing up with any platform because I didn't find that the model is quite appealing. So
Oh yeah,
okay.
well, that's exactly it. It's like I went from one thing to another actually,
Yeah.
and what changed? Just a
Exactly. Exactly. I like that. I like that. Okay. Now let's talk about staking. What do you mean by most value just generated by staking today? What are you staking? What are like where are you staking?
So we're staking our own crypto that's on our
Your own
balance
token?
sheet in the layer one chain that is a subsidiary of the Topco company going public.
So, but who's paying that staking fee though? Like, like
So the
how
net the
what's the
network
revenue?
actually has a like all chains. There's an algorithm that generates, the and defines actually what the yield is of the network, right? And so the yield is as a result. It's a prescribed formula, and it's based on validators. It's based on activity. It's based on usage as well. And again, like the more validators we have on the network, then the less yield that's generated by the network. We've got, I think, well over 100 validators operating on the network as well. If it gets too, like, and again, you see this with other chains as well. If you have thousands of node operating, the yield on that particular token that you may own, and if you're staking it as well, is like 2% versus like a nicely orchestrated layer one chain that's specific for a particular industry, while you can generate some decent yield to offset some costs, right? And so, we do actually we do like actually that our customers hold, that our token actually on their balance sheet as well, just to offset some costs actually that's as a result of ours.
Interesting. So, but where's that revenue coming from? It sounds like I'm not understand. I may not understanding this, but it sounds like you're transferring money from your left hand to your right hand. I probably
Uh,
didn't get this
well,
right.
you would think, but it is operating as a decentralized exchange, or sorry, decentralized chain, not exchange. So it is a decentralized exchange. It's set up as an algorithm. And again, the algorithm is actually what powers the overall chain and the validating of blocks on the chain. Um, we don't operate even a node on the chain at all because we're not a financial services entity. So as even as a result of, like again, like we're the company that's going public, we don't have a broker dealer license. If we had a broker dealer license, we could operate validators on our own chain, but we don't. And as a result, we rely on everybody else, which just means actually is that we're not operating this chain. The industry is operating this chain.
So, but then I'm still not wrapping my head around this. Who pays the revenue for staking? Where are you getting that revenue from?
The network generates yield, right? And as a result, like here's an example. The network and the way that the algorithm is set up, and it's the same as Ethereum as well, it mints so many new tokens
Okay, okay.
a year, right? And so the network is minting, let's say 140 million new tokens a year, right?
Right.
That's distributed across and that's provided as an incentive for the node operators to offset their costs for operating these validator nodes, right? So they're incentivized actually to secure the network because, the cost to operate the nodes is equal to the yield that they're generating. So it's a zero, sum game, or it's in some particular cases they're cash flow positive, and others they're just break even.
So then you have every incentive to stabilize or like to support the price of your token. It's because
Correct.
essentially that's how you calculate that. Okay.
That's
Um,
correct.
actually that's a then how much circulation do you guys have? And because we often see the pump and dump, scheme in ICO launch, whatever, that sounds like a last era. But but like how concentrated is it?
So there is $1.2 billion or 1.2 billion, sorry, tokens in circulation. We're holding on to 280 million of those tokens on our balance sheet. We're not selling that. That's our treasury. And that will be continued to be maintained actually by us.
So what, so if I did my math roughly right, you guys are holding somewhere between like 12 to 15% of supply. Is it? Like the rest is actually in public circulation?
Well, a little bit more than that, about 20, probably about 23%
20,
is what we're holding.
23%. Okay, 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 okay. Okay, that's a lot better than like you guys are holding 70%.
Yeah,
So
no, that's right.
okay, then um okay, so we talk about okay, so you are profitable, you have sizable revenues, you are a fintech platform. I really like the fact that you guys are not playing the game and are not the goalie at the same time, like you're and not the referee. So like that's pretty good. Okay, so let's leave more financial details for the immediate opportunity, but let's talk about you, the track record. Oh, not the rack record, the track record. Um, um, and past exits, like have you exit like in the past, like
Yeah.
like yeah,
Yeah,
walk
so actually,
journey.
so here's a little bit about me. So I'm a tech guy. I'm a software guy. I started my career building software in a startup that was, Jesus, was back in, I'm going to date myself, in the 90s, building telecom software protocols for a company called Crosskeys Systems, which is owned by Newbridge Networks, an Ottawa-based company that went public, and I think I left after 2 years of it being public. But that asset and that company is now owned by Oracle. I then jumped to another startup called Sareed. Sareed was this was in the feverish days of the dot-com bubble. But we were building all the early mobile. And so if you recall in 1998, 1999, 2G phones, Nokia was like, they dominated the industry. 70% of all handsets in circulation was Nokia. This was before BlackBerry, before iPhone, before Android, before all that. And Ericsson actually had handsets as well. Even small little Nortel in Canada actually produced handsets at that point in time. But we were building services, for the industry, and it was text messaging services. So, being able to send out weather alerts to your phone, you could subscribe to that, stock alerts, all that other kind of stuff. And I built with that company, I launched in January of 2000 a mobile banking product with Royal Bank of Canada and Microcell or Fido, as it is a mobile banking on a 2G handset. or 2G phone. Anyway, it was successful, but that company was then acquired by a company in Seattle called InfoSpace. And that was a time that, again, the peak of the bubble, right? Of the first dot-com wave. And anyway, what did that learn? What did I learn from that? We were very wealthy actually for a blink of an eye, which was all about 6 months. And that's when we got, that's when were able to exercise our shares. But I parlayed that actually into then my own startup, right? And so I did a startup after that, my own with two other colleagues of mine from that company that was acquired by InfoSpace. And it was a telecom software company called Airwide. We raised venture capital funding out of Boston and California, in Canada as well. And it rode the wave on mobile messaging and other infrastructure as well. And so I had over 100 mobile operators at the end of at that company as well. We went from zero revenue to probably $70 million worth of recurring revenue. And that was eventually acquired by a business out of Texas called Mavenir. Mavenir still runs that company as a subsidiary within, I think it's just called Mavenir, not Airwide. The name disappeared. I then started another company called Telepin. And Telepin and that was in 2007 and 8. That was a digital wallet payment platform company. So think about Venmo or PayPal, depending on, where you think about a payment platform. It was basically a Venmo and PayPal actually in a box. We white labeled that to independent sales organizations, payment providers, banks, and the biggest actually source, and again, because it came out of telecom operators that wanted to provide financial services. Why did they want to provide financial services? Because their revenues were drying up from their traditional text messaging services, right? Because a WhatsApp, and iPhone were coming into the market. They needed to offset costs with their industry, so they all transformed into being, challenger banks. And so, where were my customers? Mostly developing markets: Africa, Middle East, Southeast Asia, Latin America. Singapore, I had a large operation as well. Singtel was my customer. Anyway, we started that business, but this one we didn't do VC. We bootstrapped it. We grew that to millions of dollars a year in recurring revenue. And I sold that business in 2017 to Constellation Software. If you follow Constellation Software, they are a consolidator, and that company is now operating within another public company called Lumen Group. So Lumen is where my last company's assets are. It still operates independently. Lumen's now, I think, worth about $10 billion. Constellation's worth about a market cap of 100 billion, I think. And it continues to operate within. I then came to Polymath in 2021 to commercialize the chain and to build what we call Polymath Capital here. So my history has always been, and I think every company I've had actually or been part of has been a successful exit. The two that I started, and the other was that I was part of as well. And what's interesting is that in that company that was acquired out of by InfoSpace back in the first dot-com bubble, what was interesting there is there was a lot of carnage in the first dot-com wave, but what came out of that were real businesses and real internet companies. And we've seen that already in the crypto industry, right? The first crypto winter happened. Those that could make it did. Those that actually didn't have real business models and a real reason to be here actually disappeared. And Polymath actually, so we're the everlasting, or we're the green stock actually, or the green company actually. We're an everlasting company. We've got a healthy balance sheet. We've got a healthy revenue stream. We've always been focused on this industry. We didn't have to pivot and reinvent ourselves. We basically just stated that, we're here. The industry will come to us, and that happened with the change of administration in the U.S. And so the markets opened up. The SEC has fully adopted and embraced actually this sector called tokenization of real world assets. There is a task force that's been formed actually by the SEC. We have participated in the roundtable discussions as well. And we have successful clients and customers that have been approved by their regulators to operate on our chain and utilizing our platform.
Okay, I lost track of how many successful exits you had. Sounds like five or six.
Yeah.
That's a lot. Okay, and that's incredibly lucky, especially like exiting at the top of the market. That's just good for you.
Well, I think it's just tenacity. Like there's a lot of people that actually just they give up too fast. You got to stay at it. Well, especially if you believe in what you're doing, stay at it. Stay with it, right? And again, and as long as you've got real IP and value that you're building in, what I love about Polymath, we've got real IP, we've got real infrastructure. This is not like, hey, by the way, I'm going to, build a layer one chain. We have a layer one chain. It's been operational for 4 years. We've already invested millions into building this chain. And the same goes for our white label solution as well. Like it's not like we will have it, we do have it. It's currently being utilized, it's licensed.
And if I remember correctly, I think you guys will be the first chain that's going layer one chain that's going public, right?
That
Yep.
is right. And as a result, so what do we do for the industry? We raise the level of confidence of what it means to be a layer one chain in this space, right? We're pulling back the curtain and allowing people to look at, how our layer one chain is governed, how it's actually how money is spent. Because again, there's, financial accounting and reports that we have to provide via CDAR. So the utility token holders of our chain are gaining a level of clarity and insight that no other layer one has, right? So when you're investing in polymath, you're getting a compounding effect actually at the top co because we're operating and we're generating revenue, as a result of licensing additional technology. And the RTO vehicle that we're reversing into as well, it's not just a shell. There are assets in there where we're going to unlock an additional $10 million a year in revenue as a result of this RTO.
Okay, so that's a perfect segue into the immediate opportunity. There's a reason why I'm compressing all my timelines in production to do this, because you guys are IPO in 90 days and the window to participate is under 15 days. To be honest, you should do more marketing. Okay, let's talk about you're not doing enough. Like people need to know this, right? Like there's a lot of value here. Okay, so let's talk about the immediate opportunity. What is it? How does it work? Valuation, who's in, use of fans, long-term outlook, timeline, exactly. Just give us a spiel.
Yeah, immediate opportunity is we're raising the minimum of $10 million actually as part of this fundraising. We have the ability to oversubscribe fairly easy. The offering and the ask is it's again, so we priced out the valuation at a discount already. As I mentioned before, we're sitting on $85 million worth of NAV. We've discounted this offering at a $70 million valuation. It's a dollar per share for as part of this investment. It comes with a half warrant as well. That's priced at $1.25. That half warrant is good for 5 years. Anybody that's investing in this round is not subject to any lockup whatsoever. They're free trading on day one. The insiders, like in other words, the myself and the existing shareholders and founders, we are all subject to a 3-year lockup. So 10% is unlocked on the first day of trading. 15% is unlocked every 6 months thereafterwards. So for a total of 3 years of a vesting schedule. And that's a requirement of the Toronto Stock Exchange.
Okay, so let me translate. The immediate opportunity is you're doing the last fundraising before the IPO, right? And
Correct.
I think you mentioned for people who want to participate, it's like 14, 15 days window. And your valuation is a discount to your NAV. Now, how did you calculate your NAV?
It's very simple, actually. It's like assets minus liabilities and what's liquid, right? And that's our NAV, 85 million.
But what's your asset? Is it Bitcoin? Is it Ethereum? Is it like your own
It
token?
is our utility token and cash. It's
Okay.
what is liquid.
So it's essentially the last trading, I would think like the market rate of that token minus the times the volume that you have plus the cash, right?
That's right. That's right. And again, this is a subscription receipt offering. If as an example, something happens actually as a result again, like the process is and subscription means actually if we don't go public, the funds are returned to the
Oh,
shareholders, right? To the investors, right? So as an example, you could put an expression in that, I want to sign up for an investment, fill out the subscription documents, the funds are transmitted to our broker's account or to our bank account, depending on the process. Should we not go public? all the funds are returned to, the investors.
Right. And then that timeline is quite fast.
Correct.
So what's the, I guess what's the, okay. So you're a fintech company, you have your layer one chain, you have profit, you have revenue, you also have your token. So like these are different valuation method, right? Like do they come, I know you're doing your 75 million or so valuation based on your NAV and with a discount, but what about other valuation method? Are they like too far off from that? Because like from other people's perspective, like, oh, well, it's not BTC, it's not, it's not the ETH, so like, what's it worth? Like, people may not. So how? So if you have multiple valuation, I guess methods, like how far apart are they?
Well, Canaccord actually did the underwriting and the valuation. So they looked at it from a multiple of revenue. They looked at it as a multiple of EBITDA, and they looked at it as a discount to NAV as well. And so it all sort of it all materialized based on three different ways of looking at it, right? And so they presented us actually with this is what the market would accept. Let's provide a opportunity for investors in this particular round. Let's discount it actually based on NAV, because that's a real asset that's there, right? And so even if we were to trade actually one times our NAV, there's already opportunity right outside the gate. If you're saying actually, hey, maybe we should be trading at a multiple of our revenue, and revenue is $20 million. Well, what is a typical SaaS company multiple trading at, right? Well, that's now north of that, 80, $85 million dollar number, right? And so there's many different ways of looking at it. If you look at great companies like Constellation, right? Constellation is trading actually well beyond, its metrics, because again, it's a premium stock. It's the Berkshire Hathaway of Canada. If you look at Shopify as well, there's its metrics as well. It's not based on profitability, it's based on, future revenues.
So sounds like you, in the end, the number pick is more conservative compared to other ones, right?
It is conservative, actually, exactly. Well, we're creating an opportunity for investors.
Right. Okay. So what's your outlook on what your stock will be doing, hopefully, like once you start trading? Like what's your outlook? Do you have money in there?
Am I putting my own personal money in here? Absolutely, I am. Absolutely, I am. And the members of the management team are as well. Existing shareholders are putting money into this as well. Yeah, and so we believe in what we're doing. Otherwise, like nobody would. Again, you got to put your money actually where your mouth is, right? And so, there's a lot of like smaller investors, but there's large investors as well. We do actually have a large investor that has come in with a $10 million order. But there's still lots of room actually that we can create, in this, because that was our minimum actually that we needed. There is a maximum as well, but we can still like oversubscribe.
Okay, so how much have you guys already raised out of how much you guys are targeting to raise?
We're roughly around, I'd say there's a hard circle around five. The $10 million order is just in review right now. And so we're just going through the process of a, KYC, KYB. That's because it's required. So you could say about 15 million. We can raise, up to 20.
Okay, okay. Um, I think you also mentioned to me that your family member is going to be in this too. Like you got everybody's
Ye-
family friends in there.
Yeah, I've got people loading in.
So obviously you think he's going to do well. Okay.
Yep.
Uh, let's talk about my favorite section, which is risk. So before you start, um, so there's a couple of things I want to talk about, right? What do you think? What are the risks that you can see that can fail this? Um, and also I think there's a lawsuit going on with your takeover, reverse takeover, IPO. Like, can you shed more light on that?
Oh, with the shell that we're reversing
Yeah.
into? Well, that lawsuit actually has been, or that litigation that has been settled. So that's free and clear.
Oh,
Otherwise, we would have actually picked it as a shell. So
good.
that's been finalized, thank goodness. And there are some interesting assets, like I said, there. Um, that's of interest actually to the combined organization. The risks actually, there's always risks in everything that you're investing in, right? Like there's risk as far as, can the market adopt this actually as fast as we want it? Can we grow as fast as we would like to grow? There are certain things you control. There's other things that you don't control. I think the thing is that because we do have clients and approvals from regulators in two big markets that are approving issuances and trading, of the tokens on our chain, security tokens on our chain. That's actually, I'd say the hard work has already been done. There isn't it's not a, like I said earlier, this is not a university project or a science experiment. The infrastructure is built, and this is now a growth and scaling exercise that, to capture as much of the market that we can. Risk could be that, again, one of our clients could be issuing something that is not legitimate. And we're very careful when we sign up a customer, that utilizes even our SaaS white label platform. We need to know who that customer is. They need to sign a SaaS subscription agreement with us. We go through, a know your customer activity as well. And it's very similar to even like companies like Shopify as well. Like you want to know that you've got, bona fide and, like proper companies selling products of value and not, scammy things that, that are never delivered. So there's always risk of that. But we're working with, like, we have built out the infrastructure. We've also built out the ecosystem. And what's important here is that we're not in this alone. We do have a very robust ecosystem. We have all the digital custodians that we need that follow the sun. So we have Zodia, BitGo, BDAX in Korea. In Canada, we've got Tetra Trust and Balance that are integrated to the chain from a institutional point of view that can provide custody for our customers on the institutional side. We've also got payment rails providers integrated into our chain. So PaySafe Group, Stripe is actually a partner of ours, actually that's integrated into the chain via APIs. So for money transmitters. But then also other issuance platforms as well. So we don't build everything. There are partners that build things as well that are interesting. What's going to accelerate and why are we excited to go public? It's because we want to accelerate the adoption of the security tokens in this particular industry, and then the value of our chain. There's the organic approach, which is what we've been doing to date, which is to license our technology, and our technology to our customers. But then there's the inorganic approach, right? And this is the experience that I got from Constellation. You can acquire revenue as well. You can acquire businesses. But the difference between, let's say, us and Constellation is that we have a layer one chain, which is the backbone and the common reference point of what would formulate a thesis for us that's of interest to us to acquire. What's of interest to me is a software technology company that can integrate into our chain that adds value not from many different aspects. One, from bringing assets on chain. Two, bringing actually issuers on chain. C, solving I'll call it the buy side of the equation, so bringing investors on chain. And then lastly, actually activity as well, right? So can it integrate into the chain, and can it actually be powered by our utility token as well? Our infrastructure that we built, our platform, it's powered by our own utility token, and we'd like to see other software technology companies that fit into this category of capital markets stack integrated into the chain to add incremental value to what we're doing. And that's how you can accelerate adoption. That's how you can accelerate usage of the chain. That's how you create that network effect. And that's different than, what a Constellation and maybe what other, like, call them compounders do, when they're public, actually, in order to start building scale.
Well, being open is always better than being closed, right?
Yeah.
So, okay. Very good. Lastly, usually the last section is how to participate. So, for example, like, did you have to be a credit investor? What's the minimum amount? I know for process, you can just contact us, and we'll just send you whoever people interested, and they can chat with you guys individually. But like, do they have to be a accredited investor? Like minimum round? Do they have to be Canadian? Can they? Because a lot of the audience here is from the US. Like, how does it work?
Yeah, so we prefer accredited investors. We do actually have a president's list. We can put people on a president's list, which is again does but I'd need to know actually who that individual is. Minimum amount is 25K Canadian. How to participate, contact us. We can provide you with the subscription documents, the term sheets as well. That we have a non-brokered subscription process for anyone that's outside of Canada that doesn't have a broker account. We also have a brokered subscription agreement as well, and that would be processed through all the broker dealers through Canada. But Canaccord is our lead banker in this financing round.
Yeah, the easiest way is people can contact us. We'll get the list ready, send it to you, and they can talk to you and do their own DD directly.
Yes.
Great. Okay, that's the end. That's actually uh, I got a lot more than what I anticipated, so that's good.
Okay, awesome.
Perfect.